Most traders don't blow up because their strategy is terrible. They blow up because they cannot execute a trading strategy consistently.
And if that stings a little, then that's good. Today, we're not selling you a magic indicator. We're looking in the mirror at emotions, overconfidence, and poor discipline, and why these, not your system, are the real problem.
Welcome to Let's Talk Forex. I'm Alison, and as always, I'm joined by Chris. How are you doing, Chris?
Yeah, I'm okay, Alison. Been back home for a while now, which is nice. Looking at myself in this camera, though, it looks like I do need a visit to the barber. I've noticed the hair's getting a little bit long, and probably a decent shave as well. So sorry for looking a bit scruffy to anybody watching this on YouTube, and to you too, Alison. I apologize for being scruffy today. It's not that I don't take this seriously. I've just been very busy.
No, but looking at your shirt, you are taking it seriously today.
It's a serious shirt and an unserious facial hair. No, I'm great. How are you doing?
Yeah, good. Also, really good. Yeah, getting warmer here, I must say. Spring has hit, and I love it when I can smell the jasmine in the air. It just gives you that like real springy feeling, you know?
I love that about spring. Yeah, when you can smell the flowers after winter, it's wonderful.
Yeah. So, and I'm very chuffed because my beetroot and spinach and tomato is all growing already, which is...
Oh gosh, look at you.
Yeah.
Farmer Alison. Amazing.
Thank you.
We're here to talk about strategy, and in particular, why strategy is not really the problem. This podcast is for traders who have ever said, if I just had a better strategy, I would be profitable. Yeah, so this one is for you today.
Yeah, and you know, we talk about trading psychology all the time, but the uncomfortable truth is that an average strategy executed with discipline is much better than a brilliant strategy that's executed inconsistently.
Yeah, exactly. So trading is a game of repeatable decisions, right? You do not need a PhD. You just need a clear plan, and you need to follow that clear plan the same way day after day. Right. So let's start off with the usual suspects here. What's going to break your trading plan? There's the three usual suspects. There's the emotions: fear, greed, and then the FOMO revenge loop that we all see so often. So, you take a loss. That's normal. But then comes the urge to make that loss back immediately. And this is called revenge trading.
Yeah. Or as I often feel the urge to sort of take a trade in these circumstances, you see or you watch a trade move ahead without you, and you kind of feel that urgency rising, like, oh, I could just get in now. But you see those like large candles forming, and you see it forming quite far away from, say, your moving averages. So you know it's not a pullback trade. Then you jump in, and often then you're buying the top or the bottom of a trade. And of course, you promise that you'll never do that again. But then you see the next large candle, and it's hard to resist.
And then, and fear also shows up as early exits. Your plan says, let the trade work. But you snatch tiny win just to feel safe. And then you let the losers run because you don't want to admit that you were wrong. And then this flips the odds against you. I know that there's the pitfall of so many beginner traders.
Yeah, and then there's overconfidence. So after you have a few winning trades, a lot of traders will sort of increase their size, widen their stops, and they will start anticipating entries, which is a huge mistake. And this is such a difficult trap to get out of. It's basically euphoria dressed as expertise, I guess.
Yeah, overconfidence says, look, the market's going to come back. Discipline says the stop is the stop. One is going to protect your account. The other is going to protect your ego. So which one do you think is correct?
Yeah. And discipline is not perfection. It's basically just being consistent under stress. If you have random position sizes, if you move your stops all the time, if you skip journaling your trades, if you change your time frames mid-trade, these small things will sink otherwise very solid trading systems.
Yeah, exactly. Your trading edge lies in the small, boring decisions that you repeat. And if those boring decisions become less boring, they become sloppy, then your trading edge is going to evaporate.
We just want to sort of talk through a simple case study. So if you have a straightforward swing approach where your winning trades are meaningfully bigger than your losing trades, on paper, this will work.
Yeah, absolutely you can. But then let's have a look at two traders, right? So trader A, they break the rules. They cut winners early and they let the losses grow just this once. And suddenly that approach that was working on paper, even where trades, where winning trades are meaningfully bigger than losing trades on paper, but because it's being executed sloppily and without discipline, the whole thing falls apart, no longer works.
Then you get trader B, and they take full profits when the plan says. They take the full losses when the plan says. They keep their risk small compared to their winners. And over dozens of trades, their results stabilize and they become consistently profitable.
Yeah, exactly. So it's the same market, it's the same signals, it's the same trading strategy, different behavior. The trading system is not the problem here.
So, how do you build the execution machine? I know it's something very difficult to do. I mean, it's so easy to sort of look back on charts and say, "Hey, if you just open a trade there and close it there, and it's so easy to see your risk reward." It's not so easy when you're in the moment. It's much more difficult and complex, and your mind really does play tricks on you. So that's why you really got to build discipline, and you got to build discipline with practice. And even if you're making 1 or 2% small little incremental changes each day or each week, you'll start to see a huge difference in your trading. So you got to think of yourself as an operator of a machine. Your job is to reduce operational errors. And we've written out a blueprint to help you do that.
Yeah, absolutely. I mean, there's a pre-trade checklist that you should go through first. Before you click anything, before you get involved in anything, you want to run this quick check. The market fit. Is the current market environment suitable for your setup? Valid signals. Does the pattern match your written rules? Is there no improvisation going on here? Is your risk defined? Your entry, your stop, and your target, are they written down? Risk per trade is a small, fixed slice of your account, right? And then the reward versus risk ratio. You want to aim for winners that are clearly larger than going to be the losers. Correlations. Avoid doubling your risk by trading pairs that usually move together. And then the calendar. Is there any major news likely to hit here? Or is it going to hit while you're in the trade? And then finally, and I think probably most importantly here, you want to do your own personal state check. Are you stressed? Are you angry? Are you tired? If you say yes to any of those, then you do not trade. You step away from it.
Yeah, because not taking a trade will preserve your capital, but taking that trade really dig into your capital. And if any item here fails, any of the items you've mentioned here fail, do not sort of take it because you think it might move or you expect or anticipate the move. You just pass, and if the discipline is saying no repeatedly.
There's these trade management rules, and I think it's really important to write these down in the first person, kind of solidify them, make them real for you. So you want to write, I place the stop first, then size the position. I never widen a stop. I only move to break even according to plan, not emotion. I do not add to losers. And I have a daily loss limit. And when I hit it, I am done for the day.
Absolutely. And that daily loss limit is your circuit breaker. One bad day must not become a bad month.
Or a bad year. Or the end of your trading career. That's, exactly. It's really important. So it's really important to look at your process metrics, right? So stop staring at your profit and loss. Measure what you can control here. Is how often did I follow my checklist? How often did I follow my rules? And how steady was my emotional state before I was placing these trades? These are really important process metrics that you've got to take account of.
And I think something that traders don't realize is that your P&L will follow your process, not the other way around. If you start looking at your P&L all the time, you'll find it'll distract you and you'll start to make really bad decisions to try and get it up. And you follow your process, eventually your P&L will improve.
Yeah, no, staring at your profit and loss is just going to make you more stressed out, right? If you're worrying about it all the time, it's going to make it difficult for you to trade with a clear mind. It's also really important to journal the right way. I know this is something that we bang on about, Alison, but it's something we bang on about it for a good reason. After each trade, you want a screenshot, maybe 4 quick notes next to it. You want the context, you want the entry reason, management decisions, and an improvement for next time.
Yeah, I mean, just keep it to a couple of minutes. If the journaling takes forever, then you're not going to do it. We talked about also using ChatGPT for journaling. It's very powerful, and it makes it much easier, and it can spot the patterns. And I must say, I find it quite fun to go back and look at all my trades. And when you sort of replay those trades in your mind and remember that emotion that you were experiencing, it really helps you to learn, and it helps your neurons to almost create new paths because you re-experiencing the trades.
Yeah, exactly. And I think also, and especially trades that went badly for you, it's kind of not inuring you, but it provides kind of immunity to the kind of stress situation that you get from those losses. You can look at it in a much more rational way.
Because I think also, even if you execute a trade badly and it goes in your favor, that's actually much worse for your trading psychology.
Oh gosh, yeah, it is.
Yeah, that's much worse than you realizing that you took a bad trade and losing the trade. But taking a bad entry or not seeing your full setup, taking the trade and getting lucky can sometimes actually derail your psychology as well.
Absolutely. And as you say, journaling, really important for recognizing that as well. Going back and seeing that. Yeah. Super important. And then there's some emotional guardrails here that we want to talk about. You want to use simple if-then plans. So if I feel the urge to chase, then I pause with a short timer and recheck the setup. If I take 2 losses in a row, then I step away for a proper break. If I catch myself watching the money tick by, then I hide the profit and loss and look only at the chart. Just simple things like this that are going to kind of provide circuit breakers for your mind.
Yeah, and you also want to calm your nervous system. It's like performing any stressful job. Trading is a stress on your emotions, on your intellect. So sometimes you need to just take yourself away from a breather, take yourself away for a breather, take a few deep breaths and calm your vagus nerve. I mean, there's a whole theory on vagus nerve resets, and it's about reducing the stress of your sympathetic nervous system and allowing your parasympathetic nervous system, which is your calm nervous system, to sort of take over again and take the reins so that you can come back with a clear mind.
Absolutely. I mean, we've talked about this before. I mean, both of us meditate, and we find that so helpful in trading. To start your trading, meditate before you start your trading day. So it does exactly what you're talking about. And then there's the environment as well. So you want to make your good behavior, you want to make that easy, and you want to make the bad behavior hard, right? So you want to save a clean chart layout with only the time frames that you trade. You want to disable one-click trading, especially if you're an impulsive person. And you will know if you're an impulsive person watching this. Don't pretend that you're not. If you are an impulsive person, then disable one-click trading. Keep your economic calendar open. This is just, always, 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 because you never know. I mean, you may miss something. And then all of a sudden the charts go haywire and you've got no idea why. Make sure you've got the economic calendar open, you understand what's going on. And tape a short ready checklist to the monitor. What we were talking about just a couple of minutes ago. Have that right front and center next to you. So you're aware, so it's very much clear and present in your mind.
Absolutely. And then you can also make temptation a little bit more costly. So you can tell an accountability partner if you break a rule, or you can pay a small penalty sort of jar fine every time you break a rule. And it's amazing how this will quickly sharpen that discipline. Also because there's a consequence to it. That's not just your P&L. But some sort of external consequence. And it's almost something that you can, with the jar particularly, you're physically putting something in so you can actually see those mistakes.
Yeah, you treat your impulsive brain like a naughty dog. Yeah, so now let's never talk about overconfidence here, because I know we mentioned it a bit earlier, but I mean, it's really important to recognize that overconfidence usually happens after you're on a winning streak, right? And it's really important to realize that after a winning streak, you are not smarter. You're not a better trader. You're actually much more vulnerable. And the fix here is calibration, to recalibrate. So you want to keep your position size constant for a while. You want to only adjust size if your journal shows a real repeatable edge and a clean rule following. Otherwise, you do not adjust that position size. And then treat these new market conditions with a beginner's mindset, right? You want to, until you get fresh data, you want to keep a really open mind here. And it's really important to actually actively take control of your mind after a hot streak like this.
And also put your confidence in the process, not just the next trade.
Also want to mention here in the final step, we put together a 1 week discipline kind of sprint that we think people might find helpful. So it's kind of thing that you can do once, see if it helps you make a difference. So on day one of your week, you want to build. You want to write your checklist. You want to write those rules. You want to write those if-then plans, everything that we've mentioned here. Set a daily loss limit, and then make sure you've got a cap on your trades. On day two, you want to do a dry run. This is paper trading only, so only on a demo account. Practice the flow. Check your plan, execute, journal everything. Treat it like it was a real trading day, but this is only going to be on paper trading. On days 3 to 5, you want to do a live trading. You want to do it small, though. You want to trade it smaller than usual, low risk. Aim for a very high checklist compliance. That's what you're trying to do here, is make sure that you keep to that checklist that you've created for yourselves. Day 6, you want to review. Score each one of those trades for adherence to the rules and note where emotion crept in, because you'll be able to tell where the emotion crept in. And then on day 7, you want to refine. You want to tighten one rule, remove distractions from your setup. You want to go back and look at where you failed and why you failed, and make sure that that's not going to happen again.
Yeah, exactly. And at the end, you basically want to ask yourself a few questions. Did I follow my checklist? Did I follow my rules? And if both are solid and results are still poor, then you want to review your strategy. But earn that conversation first. I know a lot of people also do a discipline where they perform 10 trades of the exact types of trades. And from there, they start to decide whether their strategy worked or didn't work. And that's also quite a nice way to do it. Some people do 40 trades of the exact setup before they decide whether a strategy is working for them or not.
Yeah, it's about repeating. It's about repeating over again and refining and making sure that it works 100%. So yeah, before we close out here today, I just want to say, the market is not out to get you. The market doesn't care. It is indifferent. Your edge is doing the boring, correct thing over and over again and doing it right, especially when your nervous system and your brain is asking you to do something impulsive or to do something new and different.
Absolutely. And all of us are fallible. I mean, we all make mistakes from time to time. I know very famous traders, when I've read their books, they still make mistakes and they still, go off script and go off plan. And that's just part of being human. We are not machines and we don't want to be machines. But strategies do matter. And without emotional regulation and discipline, even good systems are going to fail. So you really do want to start with yourself. And if the profits come, they show up as a side effect of a solid process, not just a good strategy.
So yeah, if this helped, we'd really like it if you shared it with someone, or shared it with a trader who needs to hear it. Yeah, and let us know. Let us know let us know your thoughts on this, and we'd love to hear from you.
Yeah, and thank you so much for watching. If, as Chris said, if you liked it, also please give us a like, a thumbs up, and please subscribe to our channel if you're not already subscribed.
Thanks so much, Alison. I'll speak to you next week.
Thanks, Chris. Cheers.